You're listening to the Grow Real Estate Investing Podcast, an intelligent real estate investing how-to community where we break down the sometimes complicated real estate investing techniques into straightforward, simple to understand, and easy to follow components. No schemes, just the well-exercised foundational basics of real estate investing. Join us as together we dive into the world of real estate investing success and further release the real estate investor inside.
Hello, everybody. Welcome to the Grow Real Estate Investing Podcast. I'm Joe White, and today I'm going to talk about the real estate investing strategy investors use. I'm losing my camera. Use by selling a property and providing the financing to a buyer or seller financing. As the owner of a real estate brokerage that concentrates on property management and on real estate investing in general, I've brokered a lot of different types of deals, and I've had the advantages of being part of many transactions where I was able to learn from some really incredible, some very savvy investors. And the one thing I've learned along the way is that many property sellers actively seek out seller financing deals, especially well-established investors. In this podcast and in the guide article, I'll post the link below, I want to take a hard look into seller financing and why some property sellers use this strategy. First, what is seller financing? Seller financing allows the seller to use the equity in their property to provide a loan to the person buying it. The loan can be a small portion of the sale, or it can be for the whole amount. The loan can cover a short amount of time, just a matter of weeks or months usually, or an extended period of time, years. It all depends on how you, as the seller, want to structure the deal. And title companies typically can set this up for a very small cost for you. The reasons I see many sellers choose this approach is that it provides some really distinct advantages to the property seller. Simply put, the seller captures far more profit than they would otherwise. And there's several nice dynamics working for the seller through seller financing. The first would be tax breaks. The seller captures far more income through some pretty big tax breaks. For example, it allows the seller to defer paying capital gains tax. It's an effective and legally encouraged way to avoid paying the IRS and the state taxes. And the tax benefits often beat the returns you can get in other forms of investing, like the stock market. So that alone makes it worthwhile. You have the opportunity to earn a far higher rate of return as opposed to other forms of investing. There's often a very much higher sales price associated with the deal. Because the seller offers financing, they might be in position to command a higher price. Traditional lending is extremely expensive. This money goes to the lender or it goes to appraisers, etc. It doesn't go to the seller, nor does it go to the buyer. From an investment perspective, it's money that the buyer loses in the deal that could have gone to the seller. Another big advantage that's really not appreciated until you're in the middle of a deal is that seller financing closings are often much faster and they're way, way easier. And again, not until you're knee-deep in paperwork and jumping through hurdles do you realize how much nicer it is to be involved in a seller financing deal. And seller financing operates on the seller's timeline. There's no bank restrictions involved with this type of deal. So it's whenever the seller feels is a good time for them to hand over the property. And also seller financing avoids the risk to the seller of low appraisals. I can't tell you how many deals I've seen fall through due to low appraisals. The agreed upon price in seller financing is the price. A seller doesn't run the risk that a lender is going to restrict the buyer's ability to buy the property if a lender won't loan the amount to a buyer. If they won't loan the money to the buyer, then the buyer can't buy it often. And, very few buyers also want to feel that they're overpaying for what an appraiser said the property is worth. Seller financing, simply put, avoids losing a buyer altogether often, many times. You can also more easily sell the property as is. You don't have to jump through a bank's hoops for financing. You don't have to commit to a laundry list of property improvement projects to make the property more appealing to them. A top reason the investors I've represented have told me that they do seller financing is that they want to earn a passive and steady income. And they want that income without the headaches of being a landlord. You're basically a landlord without the risk of property repairs, tenant liability. You don't have to worry about something breaking. You don't have to worry about evictions. You don't have to worry about tenant damage. I mean, we all know the hassles of being a landlord. Basically doing seller financing is just like being a landlord, except it's as passive comes. You're not losing the time or dealing with the hassles. This investment is truly passive. All you're doing is simply cashing those checks. You also get a very nice return on your investment and ROI by charging interest. And this is another big advantage a seller has by offering seller financing. But we can actually do one better than charging interest. And that's if you take it a step further, and instead of charging interest, you charge low interest or no interest. And hear me out on this. Taxes on interest are much higher than taxes on principal. The tax on interest may be between 30 and 40%, depending on your tax bracket. But the tax on principal will always remain just at 25% depreciation recapture. In a seller financing deal, the buyer might agree to increase the purchase price. Why wouldn't they? Which is the principal. So you can, in turn, lower your interest payments for them. In other words, the buyer is still going to pay you the same amount of money. You're just going to get to pocket far more of it. And this will also lower your tax obligations. So is seller financing the right investment for you? That's something you'll have to think about. That's something you'll have to decide for yourself. But if you're looking to get rid of a property sooner rather than later and avoid the cost of holding it, if you're looking for a consistent income that's passive, and is also a very good investment without you having to become a landlord, then seller financing really might make sense to you. But I want to make a quick disclaimer. I'm not your lawyer or an tax accountant. I'm not a taxidermist. I'm not a licensed leg waxer. It's always makes sense for you to speak with those experts to determine what's in your best interest. My name is Joe White. This is the Grow Real Estate Investing Podcast. And as always, happy investing.